Hello and welcome. You're watching This is Today Television. I'm Sakshi Batra. In our ongoing special Market Master series, we bring to you a gentleman today who truly needs no introduction. Market veteran Shankar Sharma, who is also the founder of GQuant, now joins us to discuss what has been a fantastic run-up in the markets already and where do the markets go from here on. Over the last 3 decades, Shankar Sharma has created alpha not just for himself but for a whole lot of investors who'd been associated with him. He is undoubtedly the sultan of small caps on D Street and now someone you would search for on the internet, not just for his stock ideas but also fitness mantras. Shankar Sharma, it's a truly, absolutely pleasure to host you on Market Masters. So great to have you with us.
Thank you. Thank you for having me, Sakshi. Real pleasure. And fitness is as important to me as wealth, if not more important. So yeah, I'm happy to speak about that too.
Absolutely. So, such a good time to have you with us when all across the investment spectrum in the markets, we are seeing record high levels 20,000, 20,200 on the Nifty. Where are the markets headed from here? Is it the peak of the party or has the party just begun?
So this year, if you see, there is a very big disconnect between the broad market and the narrower market. Let's put it this way: the large cap market, which is represented by the Sensex and the Nifty. And if I'm not mistaken, the difference is like I think a good 150% differential between the two. Like I think the Nifty might be 7-8% up, while small caps are up maybe 18-20%, maybe a little bit more than that for the year. That kind of performance disparity is something which at one level is excellent, but at another level, it can only raise some questions whether this is sustainable or not. And as you pointed out, I mean, I have been a table thumping bull on small caps for the last 2.5 years. And, I'm sure small investors have been rewarded handsomely in the small cap space because many stocks, as long as you did a decent job of diversifying, risk control, risk management, I mean, I think most people would have made at least a 30, 40, 50% gain each year in the last 2 years' time on their portfolio. Now, when you make those kinds of gains, which is basically doubling your money in 2 years, I can tell you this from my experience. Those kinds of breakneck returns are not replicable every year. It's not going to happen every year. Let's be very clear about it that doubling your money in 2 years' time is phenomenal by any standards. And if you've done that, you should be prepared for some period of relatively modest returns. That's my sense. I could be wrong, and I hope I'm wrong because I am fully invested with a bit of cash on the side, but largely invested. I'm hoping that the market delivers similar results in the next 12 months' time, but I'm just being a little circumspect because the returns in the last 12 months have been beyond my expectations too.
Yes, absolutely. So, are you wary of any overheated pockets, any overvalued markets at this point in time? Any pocket that is that you might want to beware investors of currently?
Well, I mean, overall, small caps are, you can call them, frisky, bubble, whatever name you want to call them. Let's face it, I've said this repeatedly. While being a bull, I've always cautioned that we will make, we can lose money in small caps a lot more easily than in large caps. And the biggest problem in small caps is that because of the variety and bewildering variety and range of trading restrictions on small caps, you have GSM, ASM, ESM 1, 2, 4. I mean, I just, it's beyond my very limited intelligence to figure those out. Given the various trading and liquidity restricting measures that our exchanges impose from time to time, exits in small caps is extremely difficult when they are falling.
Yes.
You can exit only when they are rising. You cannot exit when they're falling because then they'll be locked into lower circuits or all that, the kind of stuff that goes on. So I only say this: small caps should not be enjoyed only on paper. Please convert some of this paper wealth to real wealth from time to time. on the way up, because you will never be able to do that on the way down.
Okay, so it's very important to keep taking your profits as and when the rally is sustaining. That's very important. So at this point in time, when the markets are at record highs, you yourself said that you were largely fully invested with some cash on the side. What would you advise investors to do? Is it the time to cash out or stay still fully invested? Because there is anxiety now seeping in among the investors community.
So I look at this way, Sakshi, that whether there is anxiety or not, whether the markets fall or not, it is irrespective of that. If you have made 50 or 100% gain in 2 years' time, which I
Yeah,
think, rationally speaking, has been possible, I think you must take 20-25% money off the table. You definitely must, irrespective of whether you are nervous or you're bullish, or or whatever you are. So,
sure.
please be prudent and risk averse in this game rather than be just a blind bull. Because blind bulls will get slaughtered at some point,
Hmm.
particularly in small cap. So take some money off the table.
Okay, very well said. Also, it's very important to understand from somebody like you who's also been a large part of your career, a great fund manager, wealth manager. It's important for us to understand from you how do you manage to create alpha even when the markets are at record highs? I think that is also something that is a challenge for you also as a fund manager. That every time the markets are at record highs, you would want to beat your previous kind of returns that you have made.
So, yes, that's a challenge for sure. The way, as professional investors, we can overcome that challenge is, first of all, take money off the table. 20-25% is a reasonable number if you've doubled your money.
Hmm.
That cash, you should not get into a big rush to deploy.
Yeah.
In markets, particularly when you're managing your own money, you have no pressure to deploy capital immediately. Unlike when you're managing money for other investors, okay, you cannot sit on cash because investors give you money for investing, not to
Yes.
sit on cash.
Yes.
All right. So the point is this, that if you're managing your own money, it is prudent to take money off the table, and also prudent not to just go rushing looking for something else to buy.
Hmm.
It is not wise. Wait, markets will give you opportunities, but they will give opportunities which you can capitalize only if you have cash in the bank. Otherwise, just they will come and pass you by. So
True.
don't be in a flaming rush to deploy that 25% profit taken off the table. Wait it
Yes.
out. Market will give you amazing opportunities. Have patience. You are not a professional money manager who has to immediately go back into all the stocks that is there on the second list after the first list in which he exited from. So that is a big difference between your money management technique and that of a professional money manager managing for other people.
That's wonderfully put, Mr. Sharma. And for all those viewers who always constantly battle the FOMO, because every time they see a sectoral rotation take place, momentum, they want to chase momentum and they want to get into the rally as soon as it is there. We have seen that take place over the last 4-5 odd months with the kind of stupendous rally in several pockets like defense, railways, shipbuilders, PSU banks as well. How would you really look at the run up we've seen already in these pockets? What would you advise investors who've had the better part of the pie? You already answered that partly, take away some of your profits. But what about those investors who missed this out?
It's okay. I mean, I tweeted some time back that, you know, in college, obviously we were all, young boys chasing all the young girls. And, the operating, I mean, you've been through college, you know how it happens, right? The the point was this, and that's what I tweeted, that one never got depressed if you missed out on this girl, and she got hitched to somebody else or she found somebody else better. The operative philosophy is, यार क्या फर्क पड़ता है boss, we are still in the game, we will get the next one. Okay, just stay in the game, keep the trying on, don't give up, Don't get depressed because you missed PSU banks or you missed the most beautiful girl on the campus. There will be many beautiful, or if you're a girl and looking for a guy, I mean, it works both ways. So the same philosophy works in the stock market. If you missed one sector, PSU banks or different, that's okay. There are many, many, many. It's an endless journey of great opportunities. India is a land of opportunities. So, don't get depressed. And that's a good question, because most people are fixated on what they missed rather than what lies ahead.
Yeah,
You
that's
see,
very true.
even in cricket,
Yeah.
to give you another example, which is in cricket, if you see great batsmen, if they miss out on a ball which was a full toss and they should have hit it to the boundary or something, they miss out. They don't regret it because they know they will get another similar delivery. The bad ones regret that, and that they are clenching their fist and they are shaking their head. The good ones say, okay, it's okay. I mean, I missed out, but it doesn't mean the end of the world. There is another ball coming, and maybe I'll get another, full toss and I'll hit it to the fence. That's the mental model you must have. FOMO is the worst enemy in life. Forget stock markets. Okay, so just stay in the game. There's plenty of opportunities, whether in college, whether in cricket, whether in stock markets.
Perfect, perfect. Point very well taken, sir. And since you talked about, the endless opportunities, then one can continue to look at, as India is an opportunity of endless opportunities. A year ago, when I had interviewed you, and that was the first time you had joined us on Business Today TV, the interview had gone viral, as you had that time said that India is perhaps the best market to be in. At that point in time, when there was a lot of pessimism as well prevailing in the markets, people were talking about, mandi hai. People were talking about how slowdown and recession would hit and everything would fall flat, but you still believed in India, and that is why perhaps the reason and why we say that markets are somebody for an optimist, and that is why that video did so well. Even at record highs, would you stick to that statement?
100%. I'm extremely bullish on India. I mean, and by the way, I've been bullish on India for decades because, I mean, I think India has the perfect ingredient for stock market investing. It has a vibrant equity culture. It has a fantastic market structure given, all the improvements, electronic trading, demat, quicker settlements. I mean, so many good things have happened over the last, since my career started in the 80s. I mean, it's unthinkable where we have reached from where we started. And all of that is thanks to the government's policies across various governments, across regulatory regimes. So India has got a vibrant culture, great stock market structure, and 10,000 companies to choose from. It's amazing. I mean, you are spoiled for choice. Literally, it's like a buffet table that never stops giving. So, given that, you have to be an optimist on Indian stock markets, and I am one. All I'm saying is, it doesn't mean that every year and every quarter you're going to make eye-popping returns. That is the nature of equity returns. We will forget this basic nature of the beast. But the beast can look very, very ugly when, in certain situations. And let's go back in time, Sakshi. Let's go back to last year. Last year, in the period March until I think it was June, okay, 22 was a very ugly period. Now we have forgotten that period completely. But I remember there were days, particularly if you pull up a chart of small caps, in the first week of June or the last week of May last year, it was mayhem. It was carnage. It was absolute massacre. And hey, look where we are right now. People who had the gumption to stay in the game, to buy stocks, not lose their cool, came back and they're sitting pretty. I mean, I was fortunately one of them. I'm sure there have been a million others. But the point is this: markets will test your temperament. I think that temperament test will come sooner rather than later because we have a few important things coming up, in particular the elections. Okay. Elections are due in May next year. Okay. Now we are in September, getting into October. Markets will not wait for that period to start displaying some degree of caution. They might turn cautious 5, 6 months ahead of time, right? Which we are now entering that period right now. So all of that only tells me this: it's not to say that there's a problem. All I can say is there might be wobbles. Be prepared for it, deal with it, buy some insurance by taking some cash off the table.
That's wonderful. And, related to this, I have a viewer question. So let me put that across to you, sir. From New Delhi, Sangeeta Pawar wants to know from you, what are the big risks that you see to the bull run that we are witnessing right now?
Okay, so there are two major risks that I see. Number one risk, of course, is I said elections. Elections are always uncertain, no matter what polls say and what anybody says. Ultimately, it is still a voting machine, which will determine what happens. And until that day, you don't know, right? Many things can happen, and we are still 7 8 months away. A lot of upheavals can happen. So that is a genuine and a big risk. Number one. Number two, I am a little concerned about the lending. Yeah, I mean, the let's say the unsecured component of lending by the banks and NBFCs, by fintechs, which is fueling consumption in India. If you see the pie chart, then the large part of retail loans is basically unsecured. I am more than a little concerned about that because when people start to spend money based on credit, not earnings, that can be a problem a year or 2 years, 3 years down the road. I see those as being problematic areas. I'm not saying they necessarily have to blow up in our face, but it's useful always in investing to know the risks. Now, once you know the risk, you can account for the risks. You can adjust for the risk. But not to recognize risk is the stupidest thing in the whole world.
Yes.
Only idiots shut their eye to risk. Risk is everywhere. Recognize it, read it, deal with it.
Very important. Okay, the next question that we've got is from Noida. Harsh Verma has asked this question. Is the Indian market significantly influenced by foreign investors, and should one really track the days when FIIs are doing heavy sell-offs? Should that matter to a retail investor?
FII buying, selling, or for that matter, DII buying, selling has zero impact on stock market. Zero. Absolutely zero. Do not waste your time tracking all these flows. These are nothing but noise. Why? Because buying always equals selling. If FIIs have sold 5,000 crores today or in this month, somebody has bought 5,000 crores. I mean, without somebody buying, you cannot sell. And vice versa, FII has brought in 10,000 crores, headlines, television channels. Hey, but then somebody sold the 10,000 crores. So what's the point of tracking something which nets out to zero? Buying always equals selling. It is all noise. And the less noise you have in your investing model, where you focus on data which is relevant, company performance, macro performance, rather than buy sell transactions, which net out to zero always. So they have zero impact.
Okay, fair enough. But just to ask you on the flows overall, speaking for understanding India as an investment destination compared to the other emerging markets as well, you're one of the best persons to ask this question because China plus one is what India is also touted as today. And we are also increasingly hearing how companies, even FIIs, FDIs, they're moving their money away from China, looking at the current situation that they are dealing with, moving a part of that to India. I want to understand from you, since you speak to a whole host of foreign investors, big HNI investors investing globally, is that a trend which is here to stay?
Well, I mean, Sakshi, it's not difficult to see why the trend is there. Let's be very clear about it.
Hmm.
China's economy is roughly 4 or 5 times India's size,
Hmm.
right? For the same number of people. It's about $18 trillion or thereabouts. We are 3.5, $3.7 trillion.
Yes.
I mean, for the same number of people, if somebody is there and we are here, it's obvious that the headroom for that other country is much less than the headroom for somebody like us. So it's a no brainer why people would prefer India as a destination versus China, because China's growth cannot continue at the 5, 7, 8, 10% they've delivered in the last 20, 25 years. It's a large economy, $18 trillion.
Hmm.
India still relatively is a pygmy compared to China. India can grow 5, 7, 8% for number of years before it hits a wall in terms of growth, which inevitably every economy will, because you can't keep growing 8% permanently. But for
Correct.
India, given the size disparity for, I'm repeating, the same number of people, the same 150 odd crore people, one set of 150 crore earns 18 trillion, other set earns 3.5. You know where the bet should be? On the 3.5. Because 3.5 may or may not get to 18 trillions quickly. It'll get to 7, get to 8, get to 9, get to 10. So we
Hmm.
can add 7 trillion or so to our GDP, while for China to add 7 trillion is going to be an uphill battle given the high base already.
Very true. Okay, let's take one or two more questions from our viewers, questions that have sent us. The other question that has come in to us is from New Delhi. Suraj has asked this question to you, sir. He wants to know from you, which sectors or industries in India do you believe now hold the most promising investment opportunities for the next few years?
To my mind, the real opportunity in India is to go into companies which are servicing the lesser developed parts of India. Okay. So there are many companies which are selling to Gujarat, selling to Karnataka, Maharashtra, Haryana. I mean, these are high per capita, states. They are prosperous already, very
Hmm.
very prosperous.
Hmm.
But I talk to companies which are servicing West Bengal, servicing Orissa, servicing Bihar, and I find breakneck numbers coming from the states that we thought would not contribute anything in terms of growth. So I am finding a very interesting shift in India where the consumption funnel is moving towards the less prosperous states. So pick companies which are servicing those less prosperous states because the headroom for growth in those states is a lot more than the headroom for growth in a Maharashtra. So that's the thematic I can see across companies.
So, would that be particularly in companies that deal with a lot of infrastructure, manufacturing, or would it be even smaller things? What would that get into? If you could just break it down further
Well,
for them
I
to
mean,
understand. Yeah.
most of consumer companies, I mean, there are companies which have retail chains selling jewelry in the eastern part of India. There are companies selling televisions, white goods in the eastern, in Bihar, for example. There are companies selling jewelry in West Bengal and Orissa. I mean, there are companies selling snack foods in the eastern part of India or in northern part of India. I mean, there are many. I mean, I'm not going to take names. I mean, do
Sure.
some hard work,
Sure.
but you will be able to find companies in the regional parts of India, especially the less prosperous ones, delivering fantastic numbers.
Okay. The one question that we constantly keep getting on all our social media platforms about you is that, how do you manage to pick out multi baggers? I want to understand from you the strategy, the filters that you use to select such multi baggers, beat any cycle of the market. What is the secret sauce behind Shankar Sharma's investing?
So I'll tell you this, Sakshi. The secret sauce is this: that first and foremost, to pick multi-baggers, you have to pick many stocks that you think are going to be multi-baggers. You cannot pick two and hope that the are going to work out well. If they work out well, great, all the very best.
Yeah.
Usually it will not happen this way. So the catchment has to be 10, 15, 20 stocks, well picked, well researched, with some degree of understanding of the businesses. That is number one. Number two, of those 20, at least two or three have to be companies with problems.
Okay.
Okay. Companies with problems. The big multi baggers, I'm not saying always, but more often than not, come from companies with problems that solved those problems, that overcame those problems. And I can give you an example which we are very familiar with, called Titan. Okay.
Yes.
I mean,
Yes.
Titan is a company which made a lot of money for Rakesh. We all know that. But what is less known is the fact that he invested in that company in the late 80s. Okay.
Sure.
Until the beginning of the 2000 decade, which is around 2003 4, it remained a terrible company. It remained a subpar performing company. He had to live with it for a good decade, decade and a half. because the company was inefficient, watch market wasn't doing well. I mean, there were a plethora of problems. There was too much capital, too little capacity utilization, not great management. Now, it turned out fantastically well a good 15 years later. He had no idea. Titan itself had no idea that it was going to become a 100, 200 returner in the next 20 years. Point is this, that was not the only stock Rakesh bought. He bought maybe 100, of which Titan became the big stock that changed his life. But he did not start only with Titan and end with Titan. There were many good, bad, ugly stocks in his portfolio. So that's the important lesson to understand here. As professional investors, we have a general view of what a company will look like, but that doesn't mean the view will necessarily happen that way or happen quickly. Okay, it might take 1 year, 2 years, 3 years to fix a problematic company. So start with 20 companies, have two, three problematic companies where you can see that some changes if management does or new management comes or some fixing happens. The problems can be overcome. There you can make a 5, 10, 20x returners. But it's not easy. I'm not recommending it for the
Sure.
layperson, but as professional investors, that's the area where you'll make a lot of money. Like Apple, when I bought in 2002, big problems, product doing terribly. Steve Jobs had failed. I mean, Amazon was close to bankruptcy 2001. And, there have been many. I mean, the chemicals companies I bought in 2011, infra company 2003, 4. They were all terrible companies, bad companies. And yet, they turned out to be fantastic in hindsight. Okay.
Yes.
But it took time, took effort. So that's the way to get the multi-baggers. There is no secret sauce. You will have a lot of heartbeat and, high blood pressure
Yes.
in the middle, like
So how did you have the courage to hold on through all of these toughest times that such multi-baggers for you have really created? I mean, how does one really deal with all of those losses, periodic losses, and thinking that, perhaps this company will make you the biggest loss?
Oh, you can. I mean, I can tell you that's what I'm saying, that investing is part numbers, but it is in large part your mental strength, it's
Yes.
mental models. Just as it is in life. I mean, in cricket, for example, because that's a sport I love. I mean, everybody knows how to play the cover drive and how to play the forward defense or the pull, right? I mean, it's not rocket science. Everybody, you can watch videos in school, they teach you. Can you play that in front of 100,000 people in a crunch situation?
True.
That's where this comes. It's not about knowing the shot. It's knowing that shot at the right moment in front of a huge crowd of people analyzing everything, and you are under pressure. So investing is like that. Everybody knows how to read a balance sheet and make the ratio. When crunch time comes, do you have the mental strength to stay the course?
Couldn't have been better explained to all our viewers right there. What a fantastic analogy that you've given right there. And perhaps that is the crux of successful investing, which you have successfully managed for over such long time. As a wisdom that you'd like to part to all the 24-year-olds, 25-year-olds who are watching your video today, somebody who has, say, 10 lakh rupees, 20 lakh rupees, wants to invest in stock markets, begin their journey, how would you ask them to deploy this fund?
20 lakh rupees, 1 lakh rupees in each company, or I would say even less, 50,000 rupees in 40 companies. Okay. And
Wow.
then watch those 40 or 30 companies very carefully. You will find that a few of them are doing fantastically well. The majority are doing averagely well, while the last 20% are terrible. Give them 2 quarters to perform and come back. If they don't, exit them ruthlessly, prune them out. You don't want toxic stocks in your portfolio. Bring that money back into the winners. Okay. And that's the way you're going to get your fortune. And I will guarantee you this, these 25-year-olds, if they follow this simple mantra, they will be very rich 35-year-olds.
Wow, what a fantastic way. So, if you really aim to get rich, get wealthy by investing, please follow this formula. I'm hoping that everybody's sitting down with, notepads and pens to note all of this down right there. When we talk about several segments, I remember one of your other statements went viral about a year and a half ago when you said Zomato ho chahe tomato ho, I'm not interested. So I wanted to ask you on the new age tech stocks, because now, they're talking different, they're talking profitability, they're showing some promise quarter on quarter. Has your thought process about these new age tech stocks changed at all?
No, so I mean, again, many people, go ahead and believe that these companies are going to deliver a lot of money, and I know many of them are very smart investors. Again, in investing, the point is this, Sakshi, that there doesn't have to be a fixed formula that you necessarily have to buy every stock that goes up. I mean, you have to buy things that you're comfortable with. The market is large enough to allow multiple strategies to work simultaneously. I mean, for me, these stocks remain extremely overvalued, and I'm a value investor at heart. I mean, I don't like to buy stocks at crazy multiples, in the hope that they'll become reasonably priced 3 4 years from now.
Okay, so where do you find value in this current setup in the markets? Where exactly are there any sectors that you are getting more bullish on? Or maybe if I could ask you, what could be the next mega trend after defense, railways, PSUs?
No, so I've not, by the way, bought any defense stock or any PSU bank, but I've done okay. So that's the point I'm trying to make, Sakshi, that you don't have to necessarily buy all the faddish stocks and make money, because fads are fads. If you're buying them without the benefit of any knowledge or analysis, you will end badly. I mean, I can tell you this. Now, defense has been a very fancied sector,
Yes.
but again, the questions remain whether these companies will deliver sustained, forecastable, visible profits, because defense, being a government purchase business, will have tenders, will have lumpy order flows. Defense budgets over time have always contracted in India because we have a limitation of resources. So yeah, hype is great, but we have to sift from the hype and the reality. And I'm not a believer that they will make us a lot of money going forward. So leave that. I mean, my sense is there is a lot of value in stocks which are around 4, 500, 800 crore market cap companies. Again, very difficult to find them, very difficult to find governance in them, but there is a lot of value. And by value, I mean, trading at around between 12 to 20 times current year's earnings. I mean, that in India today qualifies as value.
राइट तो ऐसे में आप ये कैसे समझाएंगे एक एवरेज इंडियन इन्वेस्टर को जो कि आज अपना एक पोर्टफोलियो तैयार करना चाहता है? अक्सर लोग कहते हैं कि आप अपना एसेट एलोकेशन को रखें, लार्ज कैप्स, मिड कैप्स, स्मॉल कैप्स का एक बैलेंस तैयार करके रखें। आपने कई बार बोला है कि स्मॉल कैप्स में अगर आप ज़्यादा से ज़्यादा इन्वेस्ट करेंगे, अगर आप यंग है, रिस्क टेकिंग है, अच्छे स्मॉल कैप्स में अगर आप इन्वेस्ट करें, जैसे आपने कहा डिफिकल्ट है फाइंड आउट करना, लेकिन आप तब भी अगर कर लेते हैं तो शायद ज़्यादा अल्फा क्रिएट कर पाएंगे, 4x 5x रिटर्न तय कर पाएंगे, जो कि आप तौर पर लार्ज कैप्स में नहीं हो पाएगा। तो ऐसे में आप एक एवरेज इंडियन इन्वेस्टर को क्या सलाह देंगे अभी?
देखिए, अगर आप एक सक्षम इन्वेस्टर हैं जो मेहनत करना चाहते हैं और आप वक्त दे सकते हैं इस चीज को, तो आप बेशक खुद करें। अगर आप नहीं हैं तो ये कॉम्प्लिकेटेड गेम है। लगता आसान है कई बार, जब ये बुलिश होता है मार्केट तो सबको आसान लगता है कि इसमें क्या बड़ी बात है। लेकिन ये आसान गेम नहीं है। अगर लंबा आपको खेलना है तो उसमें उचित ये होगा कि आप प्रोफेशनल फंड मैनेजर स्मॉल कैप फंड्स में इन्वेस्ट करें। वो मेरे 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 राय में वो बेहतर होगा। अगर आप बहुत कमिटेड हैं, टाइम देने को राजी हैं, फिर आप डीप डाइव करें। आज की डेट में काफी ट्रांसपेरेंसी है, नंबर्स मिलते हैं, कॉन्फ्रेंस कॉल्स ट्रांसक्रिप्ट मिलते हैं, पीपीटीज मिलते हैं। आप अंदर फिर घुसे, आपको 10 12 घंटे आपको डालने पड़ेंगे। इसमें कोई शॉर्टकट फास्ट फूड मेरे पास तो कम से कम नहीं है कि आपको मैं बता दूं कि इस तरह करने से आप बहुत पैसे बना लोगे। मेहनत लगता है, हमें भी लगता है, आपको भी लगेगा।
जी, एक सवाल ले लेते हैं हमारे व्यूअर्स से जो आया है। मणिवरन ने सवाल भेजा है ये चेन्नई से। वो आपसे जानना चाहते हैं कि अक्सर ये बोला जाता है जैसे लार्ज कैप्स हैं, ब्लू चिप स्टॉक्स हैं, ये सिक्योर इन्वेस्टमेंट्स माने जाते हैं, तो आप इसे खरीद लीजिए और लंबे अरसे तक के लिए भूल जाइए अपने पोर्टफोलियो में रखकर। क्या ये सही स्ट्रैटेजी है आज के ज़माने में?
नहीं, मैं तो कभी भी नहीं कहता हूं कि ये, पहली बात कि लार्ज कैप्स कोई बहुत सिक्योर होते हैं, बिकॉज उनमें भी उतार चढ़ाव बहुत आते हैं, ऐसी कोई बात नहीं है। दूसरी बात कि कोई भी शेयर लेके भूलना नहीं चाहिए। शेयर एक रिश्ता है, राइट? तो एक रिश्ते में इसलिए कि आपने शादी कर ली और आप फिर आप भूल जाओ बीवी को, ऐसा तो नहीं हो सकता ना। मतलब आपको आपको निभाना पड़ेगा, आपको
जी।
आपको साथ रहना पड़ेगा, आपको उस रास्ते में साथ साथ चलना पड़ेगा। तो आप कभी ना भूलें कि शेयर मार्केट में इन्वेस्टिंग इज ऑल्सो लाइक बिल्डिंग रिलेशनशिप। यहाँ पर शादी और रोमांस में आप एक या दो के साथ करते होंगे, लेकिन शेयर मार्केट में आप 25 के साथ करते हो।
हम्म।
आपको सबके साथ निभाना पड़ेगा। डोंट फॉरगेट एनी स्टॉक दैट यू ओन, यू नीड टू ट्रैक दैट। ये बहुत
ओ।
बहुत डेंजरस एडवाइस है कि बाय एंड फॉरगेट। आई नेवर बाय एंड फॉरगेट, आई कैनॉट। आई नीड टू नो
हम्म।
व्हाट गोइंग ऑन।
बिल्कुल। तो क्या फ्रीक्वेंसी से आप सलाह देंगे कि इन्वेस्टर्स को अपने पोर्टफोलियोज को रीचेक, रीबैलेंस करना चाहिए? ऐसे में क्या रणनीति हो?
रणनीति बहुत ही सिंपल है। इसमें तो आपको मतलब क्वार्टरली नंबर्स आते रहते हैं, डेटा आता रहता है। आप केयरफुली है, और आपको 20-25 कंपनी देखनी है, इतनी तो आपको 500 कंपनी देखनी नहीं है। उनके
जी।
नंबर्स आ जाते हैं फटाफट। आप उनके उनके बीएसई से आप फीड को सब्सक्राइब कर लें। कंपनी की कोई अनाउंसमेंट आती है, आपको आ जाएंगे। आप मोटा मोटा 5-10 मिनट में देख लें। अगर नंबर्स ठीक हैं, स्टॉक प्राइस रिएक्शन गुड है अगर उन नंबर्स का, तो आपको मालूम है कि ठीक ठाक है। अगर कोई प्रॉब्लमैटिक चीज है,
जी।
कोई अनाउंसमेंट गलत आई हो, नंबर्स खराब आए हो, तो फिर आपको करना पड़ेगा थोड़े। तो फिर वो स्ट्रेस का पीरियड वहां स्टार्ट होता है। और आपको फिर दिमाग लगाना पड़ेगा इसमें। इसमें कोई आपको, मैं ये नहीं कह सकता बड़े आराम से बना लोगे, नहीं। अगर ये कोई कहे तो ये बहुत ही खतरनाक एडवाइस है। तो उसमें फिर जाना पड़ेगा कि क्यों प्रॉब्लम हुई, रेप्लिकेबल है, सॉल्वेबल है, नहीं है। एक अलग जर्नी है उस चीज में, साक्षी। एंड लाइक आई सेड, इट्स अ फुल टाइम प्रोफेशन इफ यू वांट टू डू अ गुड जॉब इन दिस।
जी, बिल्कुल। लार्ज कैप्स की हम बात कर रहे हैं, तो मैं आपसे ये जानना चाहती हूँ कि इस साल में अभी तक की जो 4 महीने, 5 महीने की रैली हमने देखी है, जो हमेशा से हर बुल रन में पार्टिसिपेट करते आ रहे थे, लार्ज कैप कंपनी स्टॉक्स, लार्ज कैप आईटी नेम्स, लार्ज कैप प्राइवेट बैंकिंग नेम्स, उन्होंने उस तरीके से परफॉर्म नहीं किया। ये क्या दर्शाता है? और आगे जाते हुए इनके ऊपर आपका क्या व्यू रहेगा?
ये बिल्कुल कोई बहुत मुश्किल नहीं है समझना क्यों इन्होंने अंडर परफॉर्म किया है। आईटी की जो कंपनियां हैं वो यूएसए से ज्यादा प्रभावित है। उनको भारत में उनके पास खास खास बिजनेस नहीं होता। तो इनका प्रभाव जो यूएस के रिसेशन, यूएस की जो भी इकोनॉमिक रेट टाइटनिंग वगैरह की जो भी है, उससे इन कंपनियों के नंबर्स के ऊपर प्रभाव है। और उसके चलते मार्केट ने इनको एक लेट से एक कटहरे में डाला हुआ है कि आप प्रूव करो कि ये प्रॉब्लम्स टेम्पररी हैं और हम ओवरकम कर लेंगे। और अगर ये कंपनियां ओवरकम करेंगी तो शेयर वापस आएंगे, लेकिन फिलहाल एक क्लाउड है इनके ऊपर। ये एक चीज। और दूसरी चीज रही बैंकों की बात। वहां पे जैसे मैंने कहा कि जो ग्रोथ है इंडिया में वो ज्यादा करके अनसेक्योर्ड क्रेडिट के थ्रू आ रहा है। बिकॉज इंडस्ट्रियल कैपेक्स को फंड नहीं करते हमारे प्राइवेट सेक्टर बैंक्स, वो पब्लिक सेक्टर बैंक्स फंड करते हैं।
जी।
सो प्राइवेट सेक्टर बैंक कंज्यूमर को फंड करते हैं, और कंज्यूमर में भी ज्यादा करके वो रिटेल लोन्स को में ज्यादा ग्रोथ ग्रोथ देख रहे हैं। एंड रिटेल लोन जो अनसेक्योर्ड वो अल्टीमेटली हो सकता है, मैं नहीं कर रहा होगा, हो सकता है कि प्रॉब्लमैटिक आगे जाके। तो मार्केट
हुँ।
उस रिस्क को भी मद्देनजर रख रहा है। तो इन दोनों सेक्टर्स को समझना बहुत मुश्किल नहीं है कि क्यों ये अंडर परफॉर्म कर रहा है।
जी, बिल्कुल। आखिर में मैं आपसे आपकी फ़िटनेस के बारे में थोड़ा जानना चाहूँगी, क्योंकि ये एक एरिया है जो कि बहुत सारे इन्वेस्टर्स, जो कि आपके इतने बड़े फॉलोअर्स हैं, सब लोग बहुत ज़्यादा एंथुसियास्टिक हैं, आपसे समझने के लिए इंस्पायर हो रहे हैं कि एट दिस एज द वे यू हैव मेड चेंजेस टू योर लाइफ़स्टाइल, द वे यू हैव reverse aged at this point in time. So, what is the fitness mantra that you would like to share to all the investors? Do you also take some lessons from your own fitness regime for your investment style, or vice versa?
तो पहली बात, साक्षी, आई थिंक यू शुड गो एंड लुक एट माय ट्विटर फीड टुडे बिकॉज आई पोस्टेड समथिंग व्हिच इज
I have
रेलेवेंट फॉर
seen that.
women.
I was going to come to that. I have seen that already an hour ago, and I'm going to follow you. So, yeah.
Please, please do that. Please do that. Because somebody had asked me and I made it for her. And then I said that why not then open it up for the entire world of women, because women need to be as conscious of fitness as men
Yes.
do. So for me, I mean, leave the discussion on details aside, but maybe as I grow older, I actually want to not grow older. I want to remain younger and become younger on an ongoing basis. And if I want to achieve that goal, मैं ये सिर्फ स्टॉक मार्केट इन्वेस्टिंग कंपनियों से मीटिंग वही वेबिनार, वही कॉन्फ्रेंस कॉल करके नहीं पा सकता हूं। इसके लिए मैं अपने ऊपर बहुत टाइम निकालता हूं, मैं अपने आप को टाइम देता हूं, और मेरा ये मानना है कि माई रियल वेल्थ इज द फैक्ट दैट आई एम एबल टू एंजॉय ऑल द बेनिफिट्स ऑफ गुड वेल्थ। आई कैन ड्रिंक, आई कैन ईट वेल, मेरा कोई परहेज नहीं है, मेरी कोई दवाइयां नहीं है। I can run more, I can lift more weight today at my age than I could do when I was an athlete in college. मेरे लिए रियल वेल्थ वो है। पैसे तो ठीक है, भगवान की दया से बन जाएंगे और बनते ही रहते हैं, लेकिन रियल वेल्थ है ये कि मैं उस पैसे को एंजॉय कर सकता हूं। एंड मैं यही सलाह दूंगा सबको, irrespective of age, health शुड कम मच मच मोर देन वेल्थ। वेल्थ को एंजॉय करने के लिए हेल्थ के बिना आप कुछ नहीं कर सकते।
Absolutely, sir. And what a note to end this inspiring and very, very insightful interaction with you. It's always a delight to speak to you because of the multifaceted approach that you have towards investing and to life as well, which inspires a whole host of your followers. And may you continue to give us more time so that we can continue to interact more about markets and life going forward. May you continue to remain as healthy and enjoy life just the way you do. And we shall hope to catch up very soon in person as well. Many thanks, sir. It's been a pleasure to have you with us on Market Masters.
Likewise, Sakshi. All the very best to you and your channel.
If you like the video, do like, comment, share and subscribe.